Good afternoon, all. This is Fari Hemsey. It's about 4:35 p.m. on Wednesday, September 7th, 2022. What a great day. Obviously, we were long on Thursday night. Friday, we popped a little bit, and then they sold it. Sounds to me, this is what happened on Friday. Sounds to be right about here. Goldman Sachs called Putin and says, "Comrade, I need some bad news. We're way, way too short here, getting caught. Give us one chance to get out." So we got our W. It dropped heavy, and of course, yesterday was a wishy-washy sausage operation. As one of my Persian clients here says, saucisse, which is very French for sausage. That was a lot of saucisse here, and we ride up today. I'll get to timer charts quickly, but let me just do quickly. That's why I'm a little bit tired. I have more work to do. And so I thought I'd do this a little bit early. It is being recorded. As always, will be posted on our video channel, which is YouTube. And you go there, you'd see it. Occasionally, we have some other stuff there that will be of interest to you. You can take a look. For example, we had the issue with the software key. We had to explain it because visual, I'm a visual guy. Always been involved with the airplanes. And, Daddy got me into that. And electronics and software and charts and all that. I'm very visual. So we put it there so you guys see what has to be done. Why? There's so many different ways to skin a cat with the clients I have. Yeah, they're going to ask the question that I need to see, or that's why I try to show. Today we had the issue. We also sent a note out reminding people to update their GoTo software. Now GoToMeeting has got a new version called GoTo. It hasn't hit Webinar. Webinar is still running it like it used to. But on GoToMeetings, it's a wonderful package. But the key trick is you go to your app and you have to take it out. So I'm going to also record it here. As I said, people watch this. So let me also show it here. You go to this is how you update the machine. You go to your settings. Okay, you go to apps. This is video 11, by the way. 10 is the same, pretty much. There's a section there of that. You type in G2. Hold on. Someone's mic is open. Hold on. Let me turn this off. Sorry, guys. It's on the chat. Okay. Okay, hold on. So you say GoTo, you need to have this one on. 3.30. Notice this is what's used for today. Because this is still the GoTo webinar. But you need 3.30 for the chat room. Make sure you have it downloaded now. If you have any other version, delete it. Go here, hit uninstall, then come to me. Come to our webinar tomorrow. Chat room tomorrow. It updates it. Here's the point. All these softwares are, because they're used for webinars and seminars, and meetings, not seminars, webinars and meetings. They're what's called peer-to-peer communication. That means the versions have to match. If they don't match, you're going to have some delays. It could be delayed in price that you see on the chart. It could be delayed in chat. There could be delayed in audio. So audio, video, and text will be impacted. So please take care of that. Thank you. Aside from that, 4.67 is doing good. We actually did a good class here a couple of weeks ago, and I don't know if we posted it on. I think we did. What happened was that actually it didn't do too well. There was an error on the software on the transmission part, not the code, but transmission, the order processing, and did a partial. Lost a little bit, did a partial, came negative for a day. Next day, killed it. 2 days later, killed because we had a Wednesday between. Then the following day, killed it again. So, we cannot choose what date, what the market will do. But suffice to say, if you're around last year this time, this is the season. Between now and let's say let's say March, it's a killing fields. If it moves, this software owns it because it's volatility based. It senses which way it's going to go and boom, it goes. And the beauty part of the software is, of course, its job is to manage the order processing, which is very complicated if you're under duress. This doesn't have a duress. It doesn't get a headache. It doesn't say, no, honey, not tonight. None of that. It works. It's not tired. It doesn't have too much coffee. Didn't have too much champagne the night before. It trades. Boom, boom, boom. And keeps you out of trouble. So, but give yourself a few days to learn becoming it. There's some webinars and there's some questionnaire you have to fill in. If you're interested, we'll give you more than happy to give you 30-day. No, I'm sorry, 2 weeks of testing. But we need to get your questionnaire in. Why? What is this? Is it here? No, this is a review. I'm sorry, when you sign in, there's a questionnaire we want from you. No, it's somewhere in here. I forget where it is. Maybe it should be here. Why is it not here? Okay. It gives us, okay, I'm sorry. It's the thing. It's the system version of it. I'm sorry, the system version. The auto trading version. Yeah. Where you can also trade on your machine and us. There is a questionnaire you need to fill in. We want to get a feel about your personal trading history. It's completely confidential. Only I see it. Not even Nancy or Cash or Peter see it. I only see it. And my issue is to render whether this is good for you or not. Let me see. Come on. It's a very simple question. You just fill it in. Some stats I need on your machine and setup, where you have a UPS or not, that sort of thing. And also logs in your login stuff so that we create the software key accordingly. The software is updated once a month. The key, the updates are what was needed. You can see the history of our updates. Sometimes it's been one or two, sometimes it's none. Okay, and it's very stable now. It's fairly much stable. We've just added dialog boxes. So if you do something wrong, it stops you from asking a stupid question. It tells you what's wrong right there, and saves time. Lowers our overhead, lowers our tech support, and you know what's wrong. You still may have a problem, but you come to us. You need to have Windows 65, TradeStation 10, update 65 on your machine, okay? We do not support version 9.5. It's very troubling. We're doing it with one system house, and they're having problems. And then we were doing one for a gentleman in Australia, and I stopped it. I can't do it for one person. It's just too much work. And with them, I'm giving them notes that you got to go to 10. It's just more stable. So. No, we're not going to port it to other platforms. We don't have time. Too complicated, especially the API. Yeah, the order management when it gets to RR Chicago for actually executing NQ and MNQ, it's just too much. And there's very easy for us to make mistake. We can be diluted. Our philosophy is 3 T's, 3 tangos. 1, technology. 2, tech support. 3, transparency. These three T's are very important to me. And we've been doing it for years now. So if you have a machine, you have a problem, we have to come to your machine. We use TeamViewer. With you on the phone, we come to you, fix it, show you what's wrong. We ask you to take notes, and we're done. Okay, having said that, this is it. I don't have anything else to tell you. Option room is doing good. PMT, there's an order going out tonight. Why? I explained when we get to charts. Let's do the econ calendar first. Okay. Make a practice of looking at your econ calendar at night. Okay, so you know what's coming down the pike in the morning. Okay, and if you are in the chat rooms with us in the morning, please get in early. Okay, I'm noticing if I can get here at my desk at 7:30, 7:45, I have about 2 hours plus or minus, 2 hours, an hour and 3/4 before the market opens, 2 hours before the first tick for the prop trading system to give, except on Wednesdays. That gives me time to be prepared without rushing it. The days I rush it, like yesterday morning, you get into trouble. I was ahead, I gave it back. And I came slightly negative, I was bummed out. But that happens. This is trading. Today, I just said, no, I'm not going to take any prisoners. And of course, it went my way too. I'm back. You make more money on the shorts, faster drop. But, I'm not, my personality is not a short guy. I'm not a perma bull either. But, I like the economy to move forward. I like the stock market to move forward. A lot of people, this is their nest egg. So I don't like to bet short too many times. It's against everybody else. But listen, hold on. When I did here, when Admiral Tico came to me and said, Daddy, we got to go short. You've heard this story. This was February. There you go. Here's the chart. February, right here. February of 2020. I said, Daddy, you got to go short. I said, are you sure, Tico? He goes, Daddy, you got to go short. This is not going to go over like a miracle. Okay? I'm a recovering Trumpkin. He's not going to go away. Let's go short. This was not an easy time for me because this is what we did. So as soon as we thought the bottom is, we switched. Of course, these two added together, and that differential killed it. We've never had that differential, and probably we're never going to see it again. This is what system has done, or PMT's package on a cash basis, not the option side. That's a rocket on top of this, just the cash side, and versus the cash of buy and hope, what we call it, instead of buy and hold, we call it buy and hope of S&P. Now, notice this is not exact picture of S&P charts. Why? When we're flat, this stops too. This only moves forward as long as we're in the market, long or short, going for us or against us. For example, this went against us, right? Our performance dropped and the market went up. So I was short and the market went up. So that's what happened. So while I'm in the market, S&P chart is moving. Well, if I'm flat, it doesn't. Like a couple of days we were flat up here. 1 week, it neither moved because I don't have a position. But now I'm long and it's beginning to rotate. Okay, I was short here and market was dropping from here on. From here to here, market drop. We took this area. This area we cleared up about actually from February. If you go back to February, which is about right about here, this should be February. I don't know, but I'm guessing. We took out 7,500 points out of the Dow, or 750 S&P. Go to your Retirement Digest. I wish they had the ranking. You would see nobody would come close to that. Why? I'm agile. I'm patient, but I'm also agile. When I see something is wrong, I don't feel right, I change. And remember, they don't want us to change too much. There was a guy who was changing it daily. They kicked him out. This is not day trading. This is swing trading. We're on the average, I think we've done 16 and a half days. From November 14 to now, we've done about, I don't know how many trades are, 140 trades maybe. And that timeline is about 276 days. Of course, I got divided by, I got turned into trading days because those are calendar days also. But on the average, we have like a 16 and a half calendar days per signal. So that's okay with them. That's like that's a little bit over every 2 weeks. Like about 2 a month, less than 2 a month. They're okay with that. But if you go once a week, nobody can do that. You can't go in and out. And some of it was here too, by the way. This area was very, very difficult. Notice how smooth we went up? Well, this was jagged. You know why? Because I went long here, short there, long here, short. I had a couple of changes of bias. Why? Accuracy of the indicators. And you have to have a gut feel. Hey, this is what I want to do. Okay? So much for that. Let's move forward. Okay. Short week, Labor Day. Hope you had all good Labor Day holiday. OPEC also met. Yesterday we had ISM at 10 o'clock. Green report. There we go. By the way, this is economy day. Almost everybody gets it fed from here, even Bloomberg. Okay, we had 56. Came in, consensus was 55. We actually beat the prior. And almost came at the top of the range. So it was good. And still market sold. We had a negative day yesterday. Remember, the indicators are going to turn first before price does. News could be indicator. This is a leading indicator. This is the index for services. So, okay, today we had international trade at 8:30, which by the way I missed. I was not here. Oh, no, I know what it was. Oh, I know what it was. Admiral Tico decided that Daddy, we gotta go feed the babies. He's got duckies. Yeah, so out we go. Find his duckies' food in the garage. Out we go into the preserve behind us, and they're waiting for us. So we stayed there longer. Yeah, he wanted to feed them. There were 2 sets that came. And there were 3 or 4 of my babies. We had to feed them. We've been away and we forgot about them. That's not right. These babies need food too, more than the mommies and daddies. So anyhow, international trade came in today. Remember, dollar is hard because of interest rate. Yeah. So deficit is less, obviously, because dollar. It's We get more money as we ship. We also buy more when we buy. So that number should drop. But if you make it too strong, then then some people are going to have to cut back in production. Then we can afford to buy our stuff. Beige book this afternoon, I did not see. Again, I was not here. I'm sorry. I was away having a quick lunch, but of course we had a system issue. So I was on the phone remotely with Nancy, my XO, and she got it fixed. That's it. Okay, that's not right. That's right. It's a beige book. You have to read that. Okay. Jerry Powell, our venerable Fed chair, will speak tomorrow at 9:10. Oh, early. I thought it was 10 o'clock. Okay. 8:30 is jobless claims. I think we talked about it the other day. It should be in line. I think I did one yesterday morning. Yeah. Should be in line. About 240-ish is the number I'm looking for. Yeah, because it's 240. Yeah. So it hasn't moved much. This is not a big prediction. It's been pretty much around that number, which is, by the way, very healthy. Yeah. Very healthy compared to the non-farm. It's very healthy. EIA tomorrow at 11. Remember, they've shifted at 10:30. This used to be today at 10:30. So nat gas at 10:30. EIA, the petroleum is much more important. I'm saying petroleum is much more important. That's tomorrow at 11. So watch your things. Most likely, I'm going to be flat right before it. I hate going into a number. Okay, so, and of course, I put $4 a gallon premium into the car today. And it cost me like $64. I was at a quarter tank kid. Last time I put money in was gas in, it was $100. Now that was very low, and the gas was really full price. I don't drive that much. It was a while back. So that's why I'm not willing to change the car. He has hardly any mileage on it. And why do I want to do that? My garage is happy with the car he has. Why do you need to buy something twice as much? And for what? So just keep the Chase happier? Don't worry. Jamie Dimon's very happy. All right. Friday. Charlie speaks. Charlie Evans. Mr. Dove himself. By the way, he follows Admiral Tico. Do you follow Admiral Tico? Two Feds follow Admiral Tico. Chicago Fed and Philadelphia Fed. Again, that's Admiral Tico. If you don't know that, let me give you how to do that. Tweet deck, boom. And there we go. Here's Admiral Tico right there. And it's got 30. Yeah, we were at 1,000 when we went to LA. It's picked up about 400 people. No, we were we're at 1,100. He's picked up about 300 people. Yeah, good. His Royal Highness Admiral Tico, Knight Commander of Persian Empire. He's a knight. Oh, you can see him. He's a troublemaker, and he knows how to trade like nobody has. Yeah, but he said right before the attack, or the week before the attack on Ukraine, says, Daddy, 130 is my number for oil. I said, get out of here. I mean, we're trading at 76, 77. I said, get out of here. The top ticket was 13050. He uses Sigma charts. So to follow him, what do? You go to at Admiral_Tico. That's Tango, India, Kilo, Oscar. Okay. The charts go there first. So if you want to be ahead of a curve, that's where you want to be. All right, let's close that. All right. What else do you want to do? Economic calendar. Let's go to charts. Speaking of charts. I'm sorry, guys. I'm totally dehydrated. I'm on intermittent fasting, so I'm on about 4 liters, about a gallon of water a day. Highly filtered. Yeah, double filtered. So I got to drink. If I don't, I go crazy. So anyhow, let's start with our first chart. Timer. All right. Beautiful classical. We look for, what do you call it? Launchpad mode. It's about 350. So it's in the, what do you call it? Charts. By the way, we got this thing working. Hold on. Let's go to the home page. Speaking of that. This was not working, this one. Because we moved. Remember, we moved to, and it was a while back. But we moved to some updates we did. We moved to cloud. Microsoft Cloud, the best. No, Amazon is not the best. Amazon is cheapest. But who made the operating system? That's where you want to be. I've heard from friends who decided to go with the cheapest, which is Amazon. every once in a while, Bill Gates does what they did with other people, like Norton. You know, Norton, this doctor, yeah. They'll change a couple of things in the operating system. Boom, everything stops. Don't tell anybody. It's theirs. It's proprietary. We're not doing that. As a matter of fact, the guy who did the cloud, my brother used to work for Scott Guthrie, is now executive VP of Microsoft #2 there. He's the one who talks after Satya, the CEO, in the conference calls. He did .NET, he did the cloud, and he did also Silverlight. Which we were using for our previous chat room. So long story short, if you click now this, it goes there, gives you a visitor access. You'll see everything except last 4 issues. Last 4 issues not visible to you until you remember. But if you go there, you'll see what we're talking about here in terms of what we call launchpad mode on this chart, on timer chart. Okay, it happens here. Now, to be honest with you, this is a huge move. This is what I would expect to move in 3 days. Okay, between 400 Dow points to 800. With 700 Dow points there. Now let me go to Dow. It's exactly 1-to-1, but in historically it was 10-to-1. Every dollar of SPX will give you $10 of DJ. So we did less than that today. So we will go long. Now I did not go long last night. I was very tempted, but I trade what I see, not what I think. Given all my tools and experience and all that, still. That's an old axiom from hedge fund days, that I tell you. Or as Rothschild called, I go in late, slightly late, and I get out slightly early. So they asked him, what's the secret to your money making? I'm not looking for bottom or top. I'm not looking for that. I'm trying to get the trend right. So if I short this and it goes in my way, but I close a little bit early, I'm not worried. I'm not worried. I'm okay. So now I want a little pop here because remember, we're still in this channel. -1, -2. Those are Sigma channels. They gotta still challenge us. The level I would like to watch for tomorrow is let me go to it. It's easier on S&P. I'm sorry, I can't do down. We're almost there. Hold on. Is 42? No. That's a negative. Negative 4,025. That's 4,000. That's -110. I've been saying, watch out that 50 bar, but I didn't know they're going to be this close. So most likely between here, 3991, okay, which is that line, and this line. If I click on that, 400. So that range, there's a 27 handle, let's say 30 handle there. Somewhere in there, we're going to stop, and that becomes a big, big test. Do we punch through, or is it sell-off down? My work says we should sell down because we have a historically high seasonality to the downside for September. So that's what I'm looking for. Bread trust came back, and also this was one of the lowest bread trusts we've seen. I mean, this year has been remarkable. You usually don't see that these 3 days there. So from January on, we have 3 days that this means fairly low readings. Okay, so no volume activity here. CI we're pulling up. We're about to have a cross. Okay, Nasdaq leading, pretty much same story. Pretty much. A little bit more sold here. It's slightly more sold. No, almost close. Very close. 14, yeah, fairly close there. Same shape on CI. A volume a little bit more active to the downside. I mean, this has been a tech wreck. There's no question about it. We were even short, I think, ARC, 2 put spreads. Using November and using, I believe, September and most likely October expiry. Yeah, we won't take September now in our options. Too close. Yeah. I'll pay a little bit extra. Have a little bit lower vol. Per day theta would be a lot better. I have a chance. These guys who trade weeklies, they're out of their mind. It's the biggest scam. It is made for market makers. And if you don't understand that, don't even touch. Hold on, somebody's texting me. Let me see if anything. No, that's not. All right, can't wait. By the way, I lost the phone about a week ago. So I got it replaced. Insurance replaced it. It was a disaster. So they never give you a new one. There's a rework. And then I just bought a new one. The default 4 came in. Turned in my 3, got a 4. Beautiful phone. So it took me a while to program it, but it's a beautiful phone. And because I love the pen. The pen is something else. And now with the biggest screen, I can manage the servers remotely. Okay, guys, let me move on. Canaries in a coal mine. Again, always look what's happening with what is the leading indicator of the index you're trading. If you're trading S&P, you have to understand transportation. You got to know the chart, this where we are, last couple of weeks of it, with your eyes closed. If you don't do that, then something's wrong. Hey, Tace, how are you? Come on, let's see anybody else. Hi, Jason. Okay. Some folks don't know we started early. Oh, okay, no worries, they're coming in. But it's being recorded, guys. So I have a lot of work. I got to catch up. Big move on utilities. Okay, let's see what we'll get to treasuries for that. You could see what happened with Russell, right? I mean, this was remarkable. Look at that cross on CI, Elliot. Look, it had a kiss, no separation. No cross. I'm saying, it had a kiss, tight separation, but no cross. Not even yet. So, and that's the beauty of Russell. And you know, where Russell goes, so goes Nasdaq. So, except it was much steeper. Yeah. Why? They borrow money. The deal with the Russell 2000 is that they need to borrow. They don't have the same credit rating, so they can only take so much equity, and then that's how it goes to the bank. So when the interest rate goes up, they get hit. Okay. Detrender. We're still, well, all of our negative now. Oh, Murray. This changed everything. Yeah. Remember what we rotated there? Right here. Remember, that's a 200 day right there. Okay. Look the picture we were in above. They're all negative. So we're near a rebound somewhere. All 8 are negative. Think of it as a scoring indicator. Negative. They're all negative. You obviously these 4 will flip first. Okay. But when we get to this one side, it swings. So we're in that area. Is this going to work or not? I don't know. Who knows? But 40, 22, 25, I would worry about that. And of course, I want to see what Russell does at the 1850 area, 1851, probably 1855 area by the time it gets there. Remember, everything is moving. So that would be about 12.6 on NAS. Okay, 12.6. Friend of mine predicted 12 was precise. Very awesome. But you got his ass kicked down here. That 12,000, that was it. He stayed long on Thursday. So Friday and yesterday were not good. He has recovered some now. Trade what you see, not what you think. Okay? Hi there. Thanks, Dennis. Jason, I'll get to your question in a second. Very good question, by the way. Yeah. Well, let me get through my chart so that my answer would make a little bit more sense. Okay. Or you can correct me and say I'm wrong. Because I make as many mistakes as everybody else does, if not more. Okay. Dennis, we started the webinar early today. I have a lot of work. Just never ending, especially new clients and paperwork and documentation and all that. So I got to sign off on some stuff, and so it's decided to do that 4:30. Try to get out of here by 5:30 so I can get to work. Also a little bit tired. It was a very, very good day, very busy day. Yesterday was a very tough day because it started good and then went sideways. Of course, it wasn't as bad as Friday. Friday, actually, I did better yesterday. Yesterday was just really complex. Today was easy peasy. You buy and hope. No. Trade what you see, not what you think. Anyhow, back to SPX. Okay, we're not getting any signals here. Not really. We're getting this tells us the lows here or nearby, new highs, new lows rising, and new highs very low. That usually go together. Notice what was here. New lows was racketing up. We said we should rally, and we did. So now rising a little bit here. Yeah. So we should sink maybe, but look, it's not that strong. We don't have a wash we had here. We can go up until we get some shorts, and we can't go down until we get some longs. Why? Money doesn't grow on trees. As Gecko says, it just transferred. It's an issue of fear and greed. You know, I suggest you guys take a look at the Walter Deemer book. When you're ready to buy, you may not want to. Or no, when it's ready for you to buy, you may not want to. It's let me show you where it is. You guys can track it down and deal with it yourselves. Go to TweetDeck. Tico, as you know, posts these charts. He just did, okay, for the what do you call it? The Lowry up and down volume. Here's Walter Deemer, this fellow, okay, and you go to his book. I suggest you go get this book. When the time comes to buy, you won't want to. Yeah, it's gonna get that bad. Okay. You can pick up the, I think, $7 or the, what do you call it, Kindle version, and these are hardcover. But we collaborate on one of the charts I'm going to show you. I mean, I run it, I put it together, but he's very good at interpretation of it, much better than I am. There's an old hand in technical analysis for, I think, Putnam. Putnam did a lot of work. I mean, one of his buddies was a client of mine for years, also in the same department, technical analysis department. Ted Ketzer. Those of you in the chat room probably remember him. Very, very astute player. He lives down here now, retired from Boston. Okay, let's come here. Momo and SP1. SP1 dropped, pulled up. Notice the way it dropped twice. The second one was higher. This is a setting always you look for. You see that? Classical. Didn't happen there. There were too sharp, 2V. But these are W. What happens is that you get a lower reading in SP1, but Momo moves faster. It is a derivative of it. It's a younger brethren. It's lighter. It moves faster. And that sets up for what is called bullish divergence. Again, trade what you see, not what you think. It takes that extra what if out of your mind. So I think we're staying long is the right thing to do for now. Tonight, the trade will go out with a call spread to the members. Okay. Vols. If we do go up, our vol trade we have to close. It did not penetrate past 35. Of course, we have another month on. I think, though, the trade here is short. Why? The long term. I'm saying the long trade will be short-lived. Why? Again, we just went too far today. If we assume this was it, I only know it in real mirror. You can't tell in real time. But it's that's the makings of it, what we call launchpad mode. The launchpad mode usually gives you between 400 to 800 points. That defined as SPX times 10. So the ratio over the long period of time is 10 to 1 between S&P and Nasdaq now. I mean, not S&P and Dow. Of course, the ratio is a little bit lower now, but you could see what we have done. If you we did 400 points today, so we may have another 70 points to go. I would submit to you that humbly, I would submit to you that we're gonna have a lot of problems at 50-day. 50 bar, which would be like 40-30 by the time we get there, for 40-40, that range. So, yeah, we have maybe another 40 points, 50 points. So we'll take that, but I think if we find any problems there, we got to immediately go short and reverse down. Now, the question just came in from Jason is that, are you in a camp that the markets had lower later this year, or you think this is just a bunch of fear-mongering from the media? No. Forget the media. I don't listen to the media. I mean, I have CNBC on, what I call Comedy Central. But it's on mute. Why? Because of a news break I want to see. And, but I'm no longer quoted there because I asked them, don't quote me again. After Madoff, I said, what? You quoting me on the Madoff problem? And telling a note to Cox, the head of SEC, why didn't you look at Hamzy Analytics put car ratios? You would have known Madoff is a fraud. That's a wrong thing to say to SEC, because now they got to come and look at me. I haven't done anything wrong. But, every time SEC stops by to say hello, put away $20,000 for your legal bills. Just to show you did nothing wrong. So it's just too much of a disruption. But so it's not that. But you have it on for news breaks if it happens, and that impacts futures quite a bit. No, here's my talk. Here's my feeling. I've said, and Jason, I don't think you've been here the last couple of issues. So last couple of these, you'll see it on the webinars recorded on the YouTube channel. I'll show you again where that is. But here's what my thing has been. Sell Rosh Hashanah, buy Yom Kippur. That's called seasonality. Historically, the volatility of this September is very high along the year. And lowest is May. Sell in May and go away. Yeah. Rosh Hashanah this year is. Hold on, I got a couple of messages here. Other machines. Let me rectify that. Okay. As you know, we're on our service now from home, so it's very convenient, but I have to pay attention. Okay. We're good. September 25th is Rosh Hashanah. October 4th is Yom Kippur. It's not a lunar calendar, like a Muslim calendar, but it does shift. It's not exactly precise same days. Like in '98, it was October 8th. I remember that clearly. And so my thinking right now is that we need to take a low of the June out. This is June 16th. We're going to take that out. We're set up with the channel. Until we leave this -1, -2 channel, we have no business going up. It can move inside of that and drip it. So I'm of the camp saying we have a lot of issues. You see what happened on Friday. Exogenous news. This is a dead cat bounce. I'm going to ride it, and then I'm ready to drive it down, or not drive it, but ride it down. I can't drive it. I'm too small. I'm not Gil Caffrey or Tiger. But I would ride it down into mid to late September, and then I'll start nibbling on the long side. Remember, we bought Amazon at 101, $100.50 to 101. We sold 142 up there. One of them was my doc that worries about my shortness of breath. He's not worried about my shortness of breath. He's worried about his portfolio. Yeah. That was a 40% return. Not too shabby, huh? Actually, we didn't buy exactly there. We bought it about here. Yeah, it had pulled back. I remember. It was about here. We did not buy it there. It was more around, yes. Right. Actually, one of them was, I'm sitting down with COVID at my dad's old house of my dad, on the phone saying, hey, go do this. And he goes, how's your pulse oximeter? I said, shut up. Go do this. I hanged up. I don't have time. Just go get done, because you got to get in. And then he says to me, you sure? I mean, this is really, really risky. Like I said in the book of Walter Deere. When you should be ready to get long, this is where when you look at it, you're not going to do that. And I think that's going to be coming through in late September to October. So by the time we get to early part of October, I fully expect market would be so treacherous, nobody wants to buy it, and that's the time you buy. Remember Getty, one of the members of Getty Trust. I had the privilege of working with for about 11 years. And these guys are the value investors. That is, you get things when nobody wants it. You want blood everywhere. That's you buy. And then when everybody wants it, you sell into it. It's called positive slippage. Down here, nobody wants it, so you want to get in, you get filled lower, bear price. Up here, it's driven high. You're selling into it. As it goes up, you sell. That's how you make that serious money. So that's my belief right now. I could be 100% wrong. And I have been wrong many, many times. But over a long period of time, there's like 160 trades on that chart I showed you. You see what I've done. So I don't look at one trade, whether I won or lost. I look at overall what I've done over time. Okay. Vol. The vols, this tells me we're pulling back down. And I think I would draw a line somewhere around 20. Around 20 that we've peaked. And we could be there in a couple of days. We could be there this week. The seasonality into 9/11, so we'll see. Next couple of days could be very strong on the upside. So I'm bullish now, no question. SQ, no bet size to the downside. Now this is puzzling me. I have to admit to you. This is a tail risk of SPX puts by the big boys. They are not taking a position down here. It doesn't mean they're going to be right. This basically says we don't think we're going to go down further or much. Doesn't mean they're going to be right. They have not been always right. Look at 2008. The ass was handed to them. One after another. Right? Goldman, Morgan, Citi, of course, Lehman, but Lehman was a fraud. Bear Stearns, all these guys, except Wells Fargo, except Jamie Dimon of Chase. These guys sat pretty. But this says that the big boys are not bidding on the downside. Now, they're going to be surprised too. They have been. Look, the same thing happened here. As we drop down here, they were not ready. Of course, remember, they still have a bet earlier. The forward look of SQ is about 2 months. So if this was the low down here, you got to go back and say, hold on, around 4, let's say around here, what were we? 413. Yeah, they put a bet on. Yeah. They put a bet on. There's two sigma and high up there. Over 140. Remember, this is shifted, right? The limit of this indicator, and I was there at its inception. I mean, I was there, not inception. I was there at first beta test. Was within 100 and 150. We have clearly shifted that. The low ever we have is 112.22. High ever we have is 170.50. So if you take it center of that, it's around 140. They were over that. They were near 150. And that you'd see the risk was put on. We got there. I don't see that here yet. So I don't know. But of course, we didn't go up for them to put the bet on either. So to me, this is not giving me any signal. I mean, remember, that's why I have a preponderance of evidence. You cannot trade with one indicator. Nobody. Anybody that I know, we traded one indicator, they lost for a long period of time. There's no way one indicator can save you. It's a preponderance of evidence in my book. So I look at it and say, pass on this chart. That is, this chart is not giving me a signal. Here it gave me a signal. Here was one of the greatest signal ever. This was incredible, obviously. So, and you could see this sets up a signal up there, and all the way through we're going higher. What's that called? Bearish divergence. If you go backwards, even better. This was incredible. Go here. Okay, this was yeah, I remember December 12, 14. What was this thing? December 13. Okay, gave a signal. 4th sigma, not 3, 4th sigma. And everybody said, "Oh, what's going on? Are you okay, Farry? Does that thing work?" 2 months later, Admiral Tico comes and says, "Sell him, Daddy." And this was a 38% drop in 5 weeks. Never, ever this had happened before. Moving forward, let's go to yields. Uh-oh. Okay, we pulled back a little bit. New highs for 3 years on the 30. Look at the differential between 30 and 5. Almost nothing. Actually, very low. Would you be willing to sit there for 40 basis points? 40 basis points. That's 40% of 1%. To have 35 years of more exposure? Hell no. This is 5 years, that's 30. DYX, FBX. 5, 30. For 25 years extra, you get only 40 basis points? Yeah. The rates are not there yet, but they will be. We're on the right track. The rates have to get normalized. That is, we have to get to a point where inflation comes a little bit, this is going to force it to come down, and we have a positive real rate. The economy is correct when we have a positive real rate. All these years we have a negative real rate. That means the yield we got from treasuries were less than the cost of inflation, did not keep up with the inflation that was there. Because inflation was very low and the yields were very low. But now we're getting slowly getting adjusted. Why? Why is that important? You get you get a chance to glue back the covenant with net savers. We're broken that covenant, and we've got everybody and his brother going to crypto. Yeah, I'm down here in Southwest Florida. These old farts, they start talking about crypto. You know something is wrong. They can't handle the volatility. They could handle driving to lunch. Well, I mean, driving to dinner. That's why we have early bird. So they can see at 4 o'clock in the afternoon where to go. You want them to deal with crypto volatility? Yeah. Why? You have no yield on treasury. So they go hide in the stock market. Very dangerous. Very dangerous. Of course, now, those who bought yields, let's say this era, those who bought treasuries here, when that fear started, they're nailed now. Yeah, because the yield differential, unless they hold to maturity. So if you buy a 30-year, good luck. You're going to be underwater for 30 years on the price. You can't get out. You get your coupon, but you can't get out. Why? Because the value has dropped dramatically. Yeah. But we've got to get it cleaned up, and we've got to go back. We have a normal interest rate in terms of. Okay. Hold on. Let me rephrase that properly. I was doing rolls, Richard Roll. So I've got to be careful on this for bond futures. It's a new normal long-term structure of interest rate. That's what I'm going with. We're getting into that. This is what the Fed can control. They recently can control some of this because they bought some of these positions, and now they're not buying anymore. So it's falling off. Let me say maturing, except the 30. But the 5 and 10s are beginning to mature. They're not rolling them over, and they're not buying new. They're not buying new, and they're letting the maturity come. So why? Because they want to have orderly. If they go out there and try to sell it now, because people complain the interest, the bond sheet is too big, they have no idea what they're talking about. Go to New York Fed, the web page. Look at the QSIP numbers of each position. They own up to something like 70% of these positions. If you own 70% of a position, remember, these are bonds. Yeah, some board members, some board of directors can go out and say, we got to have a stock split, have more shares. Even that happens, your shares will adjust to it. They own 70% of their bonds. You control that bond. You start selling, you're shooting yourself in the foot. So they got to do it orderly. And as the economy gets better, 3.5% unemployment, 500,000 jobs, 400,000 jobs a month. I mean, we've never done something like this. Now, why is that? Because we started so low. It's not that Biden is very smart or Obama was very smart. No, but every time we get a Republican, they ruin the economy. They handed over one recession after another. So the comps are wrong. So don't give credit to Biden or Obama. They started in a hole. So that's the story of what I've seen. Again, trade what you see, not what you think. So data doesn't lie. You and I have biases. Data doesn't. It's volume and price. So that's where we are. Okay, we're pulling up. This was a good dramatic move on the yield. I'm sorry, on the spread. This is a 3-month spread. Again, we're long use, short Z. So it's September long, short December, 3 months forward. You roll it. And then I put a sigma challenge on it. Why? I want to understand its vibration. And you can see the peaks and valleys. There's nothing like measuring something against itself. It's automatically giving you the parameters. So you're not going there to guess the parameter and then guess what it means. That's a 2-factor model. Don't go there. Don't go there. None of us are going to be that smart. Yeah. So, where are we? What does this mean? Well, we're not near the top, and we definitely came back near the bottom. Near the bottom. Remember, 0 is the bottom. We'll have been up here. Didn't get there. That will be 0. This would be -5.2 area. Let me look what this is. 0.6. We got close. 60 basis points before it would be technically a low. But we're going to see this much higher. Not now. Third, fourth. Let's go after expiration of September. Yeah. Let's get to GDP, week of GDP for September. Then talk to me. You'll see what this is going to be. Yeah, this is going to be. It's going to shoot up near 0. Now, as it drops, that's going going up. And the up should be around 3. Somewhere around here. You somewhere over there. So, is that That is this, what was it, that the GDP? It was one of these. 826, whatever that was. Yeah, boom. Yeah. Okay, that's that. Let's go to Momo. I'm sorry, SP2. Yeah, a couple of guys, by the way, on Twitter asked me, what is SP1, SP2? I can't get into that, guys. I just can't. I'll share with you what it is. I posted they're free. Of course, it's in the PMT. I teach you how to use it, but I can't tell you what's inside. That's my edge. Why would I give you my edge? Well, you're going to give your edge to me. So why would you want me to give me my edge? So this is a true untested back to 98, 99. Started as a project for Stan Harley, but he never finished it with me. He had issues, and he was going through a very nasty divorce, and it wasn't his fault actually. I'm not taking sides, just from what I knew of the two of them. Yeah, and, in all fairness, it wasn't his fault, but what it ended up to be was, I can't deal with it right now. I had a question. No, I probably said, okay, Fat, you got to finish this yourself. And he was a timer of the year. He used this for 2 signals that became timer of the year. You know what I said to myself? Why don't you use it all the time? Maybe you learn to join. Of course, I was very nervous. This is 98. I didn't know anything. I said, but I don't think I'm ready to go and join Time and Digest. And then, well, my guys put me in. One of my staff members, the guy who ran my options, put me in with Time and Digest. And we used a system called Hornet to get in because they want a system from you. So he put me in, and I told him, if you want to do, hey, Nancy, I said, you want to do this? Okay, you need to manage it. So, yeah, TradeStation. I give him the code, encrypted, of course. Run it, report to them every time position changes. No input from me, just mechanical. Which is kind of like this. All fairness, let's say this. It's kind of like this, okay? Except a little bit faster. It's not that. It's not that. It's kind of this, except a little bit faster. Okay, it's a kind of a faster weekly, if you think about it, without saying anything more. And we came in 11, 150 came in 11. Well, I'm looking at Time and Digest, and there's a list there. I'm not on the list. What? I told him to shut it down. No, Ferry, please, no. I said, tell him to shut it down. We're out. If I can't get ranked, why are we putting effort in? And he did something sneaky. He wrote to them and says, Ferry wants to close this. He's just not interested to pursue it. And he didn't say anything else. He did not tell him what I think and all that. I just said, we're not interested to pursue. I get a call from Jim Schmidt one day. Not Johnny that we have in the chat room, Jim, the father. He goes, Mr. Ebsy, I need to talk with you. I said, go ahead, it's your dime. And I remember I lived on the water in Playa del Rey. And I said, just make it quick. I'm going for my swim. And I was just getting my psoriasis. I had to go swim. He goes, I just want to ask you to stay on. I said, for what? I didn't get anywhere. Because, well, we said, we don't have time to publish. I didn't know how many there were at the time. He said, we have 120 people. There's no room to publish everybody. We published top 10, and you came 11th on your first year. So we're going to showcase you, but we want you to continue. I think we have something. That's when I got serious. So I said, okay, I got to put some tools together. One of them was this indicator. Of course, I had to improve the representation of it. The code has not changed. This is exactly the code that I suggested and wrote for Stan, but Stan never could use it. He wasn't good at TradeStation. He was good with F-14. He was a F-14 backseat pilot. He was good with ARC-9 on top. He could shoot down 6 MiG-23s at the same time, but he had trouble with TradeStation. So anyhow, I used to drive up to Santa Barbara to help him get started. Actually, Ventura, right before Santa Barbara. To get him set up and update on this and that. 3 days later, I would maybe somebody even stay the night there. And then 3 days later, Ferry, this is not working. Oh, I forgot to log in. The chart doesn't work. You haven't logged in. We lost connection. Anyway. Good guy, but yeah, it was distracted. Anyway, long and short of it is this: we get signals below 25. You want to buy. Signals above 75. You want to sell. The bottom is easier, and you want to see divergences. The key is divergences. There's no V bottoms that often. Mainly it's divergences. Boom, 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 boom. And you go. And you're going to be ready. I prefer to buy the second leg of the W. Is it broken or not? I don't care. But I want to buy the second one, not the first. Why? It's a flush. It's a flush of the week longs that I jump in. Okay. This also tells me, Jason, that we have a rendezvous point coming up. As you know, these are 3 stock RSIs. Not my indicator. Tuchar Chandy did it. The book is on my website. You can buy it on Amazon. I have no interest in there. The code is there, open. I just coded it here. And then I did the 3 of them, of how this should shift. And I think, I don't know who asked me once, wrote to me, how do I do this? He has our indicator package. I said, just shift it like this. And he's got it running and he's happy as a clown. But we look for rendezvous point. That means all 3 line up in one area or the other. Not in the center. Extreme up or extreme down. Below second line or above second line here. Okay? So once we get there, then we got to set up. This tells me we have a little bit more to go. Would that be shortly? Yeah, probably. I don't know. I just think seasonality is going to show its ugly head. And for somebody who's going to be willing to be both long and short, we control that through our delta. So we have put the spreads on call spreads. And then a spread. So they're not the same month. They're not the same coloration. So that at any one time, we got to take care of a trade or two. Take a profit, cut the losses short. Whatever it takes, you do it. Why? Mechanical. And you need to be correct about 70% of the time. The rest is money management and whoopee. You get a hit it there and you're good. Tops and bottoms don't matter. You got to get the trend right. That's all. Just don't be inverted. Like you go long, like yesterday. I would go long, the market would drop. I would go short, the market would rally. So then I know I'm inverted, I stop. Because now you're feeding your broker. And my broker is rich enough because the majority of money goes with Jamie Dimon over at what do you call it? Chase. And he doesn't need it anymore. All right. LUDVR. Lowry's up and down volume ratio. Admiral Tico posts this. Make sure you follow Admiral Tico. And then usually I follow it a little bit later and post it and so forth. We have not hit 90 on the upside. We did not even hit 90 on the bottom side until about here, which was Thursday for a few moments, and we rallied. And then they killed it the next day. I'm sorry. Then they killed it. I'm sorry. This is not. Yeah, that's Thursday, right. And then they killed it on Friday. Yeah. We haven't had really a break here, down or up. Recently, we've been a lot in the middle. Most of the work here is done by what do you call it? I forget the tip of my tongue. Paul Desmond. If you go to my feed, actually Admiral Tico's feed, he says must read. You want to read that? Click on that. We're hosting that, so you guys could be able to read it. You'll see it goes to our Ramsey Alexander Dodge. But read this. Paul Desmond of Lowry's reports. Very, very nice gentleman. I think he's passed away recently. Lowry's out of Tampa. And he's a must read for understand this better. And the key thing is that, of course, another person to follow is Norseman 1. Bo. He used to be in our chat room. He's just finishing a 55,000 square feet house. He's got painting contracting for very, very high-end homes. So it takes him a year typically. So he sits in his portable office on the job site and trades and market only. He doesn't do futures really. He does market only. T triple Qs or S triple Qs, does some spies and so forth. Using his timing, he's very good at it. But we all go to Walter Deemer. Nobody's as good as Walter. And of course you have the handout. So take a look at that and run this so you could see how it is done. Okay. These are Bollinger Bands, just simple 2 and -2. Center line is 20, 250 MAs, and we're running hourly because we want to see where we are inside of the day. It's crucial inside of where we are. If you run it daily, you're going to have these lines too close to each other. You can't decipher much. And if you run 30, it's a little bit too slow, but 60 seems to be good. A lot of large traders look at the hourly closes. It's significant to them, and I think it's good enough for us at 60. Now, this is the work Peter Cook did, my main moderator in the chat room. What a bright guy, very humble. And as you see, the system is so short. This has to do with these two indicators, or value indicators, and that actually Tracerson carries it. I don't know who else does. In fact, I haven't had interest to find out, but Tracerson does. And it's we're basically running 4 systems here, but they're daily. These are daily, and now Peter uses this one caveat. Peter uses this long only. So if a system gives him a short, he doesn't touch it. His longs have been excellent. And this goes back a couple of years. I've been running about a year. This year, I said I'm going to turn the boycott on to the shorts. Why? I think, I was net short very early on. I mean, my first short was in February, way before anybody could spell Ukraine. So, and I don't know what gold was, but I don't care. Gold is not a play for me. They keep everybody telling me, my friends here, that they have buried gold in their backyard and say, one day we're going to need it. I said, who's going to have the money to pay you? It'll be 5,000 an ounce. I said, who's going to have the money? You need to break it up, chop it down, and go buy a carton of milk with it. But you won't be able to sell like that. So I'm not a gold play. But before oil was at these levels, at 75, 77, some range that was that, I said, we got to put the shorts on. So you could see the short signaling, that's all. So they've been short all of these yet, and it has not turned. When this turns, I'm going to get a call from Peter. He's going to say in the chat room, that's the time to really, really, really load up. You back up the truck and load it up. In case of Mr. Petrucci, he'll back up the barge. Yes, because he has unlimited amount of Italian liras. This is pre-euro. Yeah. So he's got kilos. I'm saying we talk about tonnage here. So he'll back up the barge. Yeah, exactly. Okay, I'm almost done. I'm more than happy to take your questions, but let me give you my last chart. It's 5:37, guys. I gotta hustle. Sorry, let me get to this chart. Okay, this is a chart you can run yourself. It's on stockcharts.com. Again, $ Sierra Papa X-ray Alpha 200 Romeo. It's a 200-day difference. I'm sorry, it's a scoring indicator of components of S&P that are above their 200-day MA. And as you can see here, let me see, this is what it says. Let me go to 50. Okay, there we go. All right, let me close this crap. Sorry. Okay, as you go here, I loaded 5 years, by the way. The default is 2. You can go to 5. So you could get a more perspective where we were against SPX. Okay? And I'm using 20 and 50 MA. Their default is 10 and 20. You can change the default, update, and save it, and it knows what to bring in. Okay. So actually, you can't save that. You can save it, but the URL is actually the insert, and there's a URL for that. That inserted in this what's called frame. So it's an old website, old technology. Yeah, but it works. Who cares? It works. So look where we have come. Higher lows, slowly higher lows. Okay, and you can see the extremes. I don't have a signal here yet. You know why? Because we're not steady moving up yet. These two lines are going to get close to each other. That's the rendezvous point. We want to watch that. If it crosses, the long is in trouble. But if it does a kiss is a failed cross. It touches it and bounces. That's a kiss. If it goes through it, for example, this is a kiss right there. This is a kiss. The red and green, red and blue line, that's a kiss. It came to cross, it failed. Here it did go through. That's a cross. But that was supposed to be a kiss. This is a kiss. The blue came to break down, did it. These are very strong signals. That one's not a kiss. That means we're going to throttle up. It came almost to down. That means what? The long sold some of the position. It made cash. Wait for the market drop at the sigma level. Bought again. It's a multiplier effect. Okay, or if you think about military war, it would be what we call Excuse me, force multiplier. Those are strong signals. Anyhow, so that tells me, yeah, we're off the bottoms, no question. You can see it also in price, so that's not a big deal about indicator. We're indicator to be ahead, but if we get a cross here between these two lines, I think my scenario for June. I'm sorry, my scenario for late September to early October to be below the June level will come through. And I'm sitting there with a bunch of calls on VIX. I'll be extremely happy. With that said, I thank you for coming. Any questions for me? Any charts? Any products? Any questions? Again, I will urge you to take a look at the video if you got here late. If we started early today, it's being recorded. It will be posted as soon as we can, the one we're done here. But always trade what you see, not what you think. I threw all my books out the window one day in Chicago. And I think I had a pretty decent education. No good. Now when it comes to the market, market will humble you easily and every day sometimes. And yesterday was a tough one for me. I went nuts. Question, Dennis. Yes, sir. That's just a time value. That's just a time value, sir. Michael, you got it. Michael Becker says, I got to drive to my early bird dinner. Yes. You got to go to while there's daylight. Exactly. Yeah, that's just it. Time value, sir. I mean, interest rate is a little bit high. I understand that. We didn't have that before. Now you get also dividend. So, and being this down here, the yield is higher. So it's the value of the dividend too. That's what it has to be, though. But that's healthy. You want the futures to be forward. Yeah. Now, if there was a discount, okay, let's say if December was lower. Now, this is S&Ps or Nasdaq. What are we looking at? Let me go down 1 second. That's a good question, but here's matter of fact. We need to put these in. Why? We're coming to. By the way, rollover. Rollover is Sunday, guys. It's not this Thursday. Why? CME changed that. NQ. Okay, no worries. Okay, got you. Here's the NQ Z22. Here's ES Z22. You can see volume now moving on Sunday night, not on Friday morning. They shifted by 1 day. So it's over the weekend. We're going to change our charts Sunday night on our transmission, so Monday morning, people don't come in with the wrong contract. And then you have only 5 days left. As a matter of fact, technically you have 4 days left. Monday morning. Why? Settlement is Friday morning. It's not Friday end of the day. Friday morning. So your rate of volume going away is 25% a day. You could be stuck. You can get out. But those guys like Murray is there. You got to pay Murray. He wants his VIG. Yeah. There's actually in the old days in the pit, there was an area there near expiration. Those guys only handle expirations, and you better be ready. You should not go in there and try to get a better price because you're going to get no price. For them to keep their VIG, they would force you. You take their price or you go away. I won't sell it to you. You got to be stuck. Yeah. Then you got to come up with the cash. Remember, it's a contract, forward contract. You got to settle either physical or cash. So let's put RTY in there too. And then NQ H22, 23. All right, so let's take a look at that. So if I do it like this on symbol, okay, that's so you have 433. This is okay, hold on. This is 263. Are we close right now? Yeah, we're close. Okay, so static. It's between 5 and 6. So NQ is 263. That is almost 80. Yeah, you're right. 77 points. And then the other one is Murray. What is that? That's why are we getting updates? No, it's not open yet. No. Okay. What is going on? It's 545. Okay. So That is, let's see. That's 170 points. Yeah, 180. You said 180. Bravo. Close enough. Yeah, that's just forward pricing. Yeah, the forward contract has to be. Yeah, cost of carry. Yeah, it's getting a little bit bigger. See, the dividend helps you with cost of carry. Dividend has moved up a little bit, but now the interest rate has kicked in. That's what the suppression is. Otherwise, there's nothing. If you look at a chart, the issue is really look at the spread. Chart the spread intraday. And I don't do that. You know what? I don't have 100 mil. That game is for people like 100 mil. That's why I trade your buddy Mr. Deli. They were trying to do that. They didn't have that kind of money. So they were trading with a SPY. They were trading a SPY versus ES. Guess what happens? You're going to have a heart attack. Get the direction right. Forget the spreads. You're too poor to do that. You're not Bruce Kovner. To play the spread, you need 100 million, couple 100 million. Otherwise, you bang your head against the wall, one day you're going to have a heart attack. And, you know, Delhi is a good friend of ours. You know, it's sad, but that's what happens. Don't figure out how to play the trend. People who trade spreads don't know how to do a trend. And that's what they get into. A small amount of capital and try to do the spreads. No. Use a small amount of capital, do the trend, your capital adds up, and then you go and do the bigger things. But I would never go to the spread. Yes. The returns are too little. They're razor thin. I'm not interested. Yeah. Remember, soup is expensive down here. Okay, now what am I doing here? I want to keep looking this week at the rollover, and I'm looking at volume. Volume is crucial for me, okay? So, now they've not updated this. Why? Because they're getting ready for the open in 12 minutes. So as this goes on, I'll keep looking. And you're going to see that we're not going to change until Sunday night. Used to be Thursday night. It was shifting. But there is a page there. Hold on. I think I wrote it down. One second. I'll share that with you. Okay. No, what happened? Earlier, okay, there we go. Take this here, let me take this. I'm going to put in the code there for you guys. There we go. So for everybody to look at, there's the link. Boom. Okay, now let me go here. Please bookmark this page. This is crucial because I was talking to a system master telling me, oh, we're going to roll on Wednesday. I said, why Wednesday? Well, we always did. The floor used to do that. I said, floor is gone. He said, used to. Floor is gone. It's a long gone from different era. Put that in, take a look. I would actually bookmark that, but you could see there. They're telling you the 22 is going to be 9/16, it's expiration. Roll is the 12th, which is Monday. Before used to be start tomorrow on the 8th, okay? Never today on a Wednesday. Start tomorrow, but really wouldn't get there until 9, the Friday. Now, because we use OTF, which is very, very volume sensitive, we found that we have to wait. We could not do it on Thursday. We have to wait Friday. Now, even better. Exchange says over the weekend. I love it. I love it. That's the way we go. Michael, rendezvous point is coming early for decline October. Is that a problem? Well, nothing's going to be perfect. Right? No indicator is always going to be right. But we're not there yet. Only 2 are down there. And remember, this is the longest one, so it's going to be slow. But we could hit. We could hit. Remember, here we were wrong too by a few days. None of these days got to be cut in stone. You know, they call me Nostradamus, but I'm no Nostradamus. I have a feel. I have a fuzzy area. It's a neighborhood of data. That's it. It should be around there, based on volatility cycles and time cycles. Okay, time cycles are price or volatility cycles. Okay, because volatility cycles are even more predictable and more consistent. But there's no guarantee. But somewhere in there should be that. Now, remember, volume goes away, goes to near zero between Rosh Hashanah and Yom Kippur. Why? Our Jewish friends are in synagogue, including my sister. She's going to be there on October 4th to atone all her sins. And who is she charged extra? And what poor borrower gave her so much? She's actually borrows. She borrows herself. No, but she's. I mean, she's a. Sometimes she passes on. They do hotels, so they get a good loan from Goldman. They sell it with the loan. Yeah. So they make it assumable. Yeah, because they're commercial. But you never know. But sometimes she gets funny and says, "No, I want my loan to be paid off. You get your own loan." Right now, for example. Yeah. So for those, she needs to go and atone her sins. But that's fourth. But there's no that period is no volume. Chances of us going high, seasonality is very low. Now, one given year could be different, no question. I'm talking about over the years and years and years. That's the seasonality. Would this year exactly repeat the past? I don't know. Nobody knows. You know when we'll find out, Michael? In the rearview mirror. Is it a problem? No. It's just something we have to observe. Yeah, just something we have to pay attention to. I'm trying to get my cursor here. There we go. Okay, so here, I bring the calendar up. So here's what I'm looking at. 4th is a Tuesday. Okay, I suspect. Oh shit. At 7th of October, which my grandma's passing with, is non-farm. Remember, when we launched this product, the ORB on the 7th last year. Yeah. The 4th is a Tuesday. 7th is a non-farm because it's the first Friday of October for September. Holy mackerel. So as we come out of that hold here, if we could bounce, we have this resistance in front of us. Or the numbers are soft, and let's say by then, oh, by the way, September we have, what do you call it? September we have Fed 2. We have, remember, in August, right? September is coming up. So maybe by then, Jerry figures out he can't raise interest rates anymore. So we'll see. But anyhow, good question, Michael. Okay, I'm going to put a trade on tonight. Yeah. Temporarily, we got to put something on. Given what we see here, we got to. Okay. And let's see how far we go. If we go into, let's say, 4,100, hunky dory. And then we got to short it. Yeah, I don't think we're going to go past that. We have too many issues. But the biggest risk we have is exogenous. It's what the comrade Putin does. Yeah, son of a bitch. Anyhow, but then again, well, we need always a few bad guys out there too. So they can't be all good. Anything else, guys? Any other questions? It's 5:53, guys. I gotta run. Thank you for attending. Appreciate it, Greg, Michael, Thomas, Dennis, Mr. Petrucci, Jason, Charging Cycles. Oh, that's a good one. Okay. All right, that's a good one. Brett, thank you, Brett. Michael again, of course, Audie. Nancy, thank you. Thank you for all you do, Nancy. You're remarkable. Thank you, sir. Good night. I'll post this thing as soon as it's available. Probably within half an hour to 45 minutes.